Hello everybody, welcome back to my channel. Please like the video just because you're so stoked that I have made it, and subscribe to my channel. Today we're going to go take a look at NatWest Group PLC. They are a bank. We're all scared out by banks today, but you know what? When things are down is a good time to buy them sometimes. Maybe wait for a couple more banks to fall, but here's one you can dive into after they do. They're located in the United Kingdom. They're called NatWest Group PLC. Ticker symbol is NWG. This is their income statement quarterly for the year. They seem to be growing up every quarter. Actually, this goes back a little over the year. You can see the profit growing as well. The yellow lines are net revenue, net income, $1.32 billion for the quarter on revenue of $3.73 billion. Darn near looks like almost a third of their business is profit on the bottom line. Who doesn't like that? They do all kinds of different banking services. Absolutely in love with the balance sheet. Being in the UK doesn't bother me one bit. Might as well be right here in the USA. I love the income statement. Fantastic. Here is their balance sheet. We have liabilities and assets. They are right side up. They've always been right side up. A lot of the banks, you'll see them looking just like this, about dead even. Usually you don't have runaway assets over liabilities with the bank because every time they make a loan, they give the money away. And it's a liability, and I guess it's an asset when they pay it back. So it's a balance, usually dead even. You don't want to see them upside down though, but they look kind of healthy. And they have $310 billion in cash and short-term investments. Hoorah! That's awesome. That's an awful lot of cash. So when you run a good company and you grow the profits, you keep a good balance sheet, you have a bunch of cash, your stock grows up, goes $6 to $6.80 a share in the last year, 17.44%. It's had its low point to $5. It just lasted for a few minutes. It was in October. It's probably right at the very peaky peak of inflation growing. Kind of had an oh shit moment here, right here when the 9% came out, on the worst one. And then it's gotten better as inflation was healing itself. And it's taken a little dip as inflation's dipping down. This one you want to check for variable rates. Just by the way it's acting with the inflation. I don't know if banks are all going to do this, but we're going to look at a lot of them tonight, and we're going to learn some trends, whether they act with inflation for the most part, because this one looks like it's just kind of going along with it. Those are the inflationary times and lines, and this dip, it's probably February 14th. Right, when we find out we were going up. Actually, the UK, they don't delay their announcements for 2 weeks, so that'd be February 1st. Right on the nose, look at that. February 1st was when they got their news that January sucked in the UK. And then here we come down again. So you get an inflation report, let's just say March 1st, or the next one's going to be April 1st, and it turns good for the UK, you buy, because this thing's going to ride and ride and ride and ride and ride. You get a good report back here in early November, it just rides and it rides and it rides and it rides. There's no boat that gets missed. It's not like you're like, oh my God, I missed out on, 3% or whatever. Don't worry. It just goes up steady and steady and steady and steady until it gets that bear bull. This is a perfect bear bold mover. I like this one. I'm going to put this one on the watch list. I don't know if we're going to get it for the lows anytime soon. Maybe if the banking crisis, when they get done wringing that news out. I think the Europe might have been still. I'm not sure what time schedule they're on. I know their soccer games are at 6 in the morning here, and it's like noon there. So I'm in Florida. So that would make them me ahead of them, which means I think in the end of my trading day is the beginning of their trading day. So they would be very much aware of the banking crisis issues we had today. And they probably had a late afternoon dip. That's probably right when they caught the news of the American oh shit moment. This thing went from 690 to 675 and 680. Didn't really tank a lot, but it fell, 2.3%, which I guess is about what the ones in the United States did. Now, the ones most highly in suspect are 8%. But just about any good bank fell 2% today. So I like that. Nice profitable company. Market cap 32. Is that in millions? Yep, 32 million US. That's got to be 32 billion US. They are a pretty darn good looking company. I really like it. Yep, and they got an awful lot of money. Assets, just to get an idea of how the level. This one, $720 billion in assets. This is bigger than Lehman Brothers was. This is bigger than, probably twice as big as the one that failed today. Before you buy any bank, maybe wait till the interest rates go down, or make sure they're safe from harm. They should all be getting interviewed. They should all be getting publicly come out and stating, look, we have no attachment to variable loans. If they come out and they tell you that, because the reporters are going to be asking, then you'll know. They'll probably want you to know, because if you know, then you can deal with them in good faith and not worry about your deposit. Every depositor is probably freaking out and wants the answer to that question. So it should be very findable online if it's not published as a stock article, which I would imagine it would be as well. NatWest Group. Check this one out. Let's see if they have a dividend. I do not see a dividend. No dividend. 61,000 employees. This place is huge. Wow, what a beast. And I love the price. I love that it outperformed the Dow last year. The 5-year chart, it's always bounced. $6 to $3 was its bottom here when everything closed during COVID. This was COVID closed as soon as it opened again. But it's a good bouncer. It's a good trader. It might not be a long stock, but it might be one that you can buy in these troughs and just decide that you're going to sell when you're at a profit, and you're not going to sell until it hits that. And just don't buy much of it. Just refuse to sell it at a loss and just sit on it until it gets right. It'll get right, as long as you didn't buy it at one of these caps at the very tippity tops. But who knows when you're on one of those, right? But right now, I would say we were off a tippity top, if that's the tippity top. If these are the tippity tops, then no, we're not off of them yet. You're looking at, I don't know. I like this one at $6, somewhere around there. $5.95, $6. Keep your eyes on it. It just fell some more. Now we're down 14% after hours. It says it's down to 680, which is exactly what we're seeing there. It might be worse than that. So now it's down. Oh, we're at a 5-year chart. It's down 14% in 5 years. So 5 years ago, it was a little bit bigger, or $7.94. Anyways, thanks for checking out the video. I like the bank. Once they're crisis proof, and I got good wind of that, I'm going to pick up a few shares of this one. What I like to do is heavily diversify with companies that I believe are real companies that do real business, that really aren't going out of business tomorrow, most likely. And I buy such a small amount that I really don't care what happens to them. You know, if they go goodbye, I just say goodbye. It's like no big deal. Now we're all getting commission-free trading. There's no reason to buy a shit ton of anything. Being diversified is good. Most people with penny stocks are not diversified. And you should just have tons of them. And you should be buying them, ones that you really like, but not in large quantity ever, because that would be stupid. This one's in the $6 range. This is the type of stock you could probably buy a shit ton of and still sleep at night. But still, I don't like to play like that. I like to grab myself 50 shares for $6 and then just sit on it. And sometimes I like to go ahead and do a sell, good till canceled, extended order, extended hour. I'll do a sell limit. I'll buy it for $6.20, and I'll just set that for $6.80. And when it rolls and it touches $6.80 one day, my little thing goes off and tells me that I made money. And so far as involvement or thinking about it or looking at it or obsessing over it or wondering what it's doing, I really don't give a shit what it's doing. I just wait for the buzzer to go off, and they go off all day long. You made $30, you made $50, you made $20, you made $15, you made, it's just a different thing every time. So you hear a beep, it's like a good sound, it sounds like money. So it's called order filled. I know when the order filled, it hit my price, I made money. Sometimes then I look and see how much. Some of them I set higher than others. Some of them are a little bit more meaningful. Some of them, if they go down enough, and they have to go down a whole lot, like down 80%, then I'll buy more of it. Then I might buy more of it. The old, fall 50% and buy more of it. No, I want to go down to 80%. I want to get, 4-to-1 or 4-to-1 off of it. I want it to cost me 25% what it cost me the first time. Then I'm in real cheap, and I feel like I'm right with the price instantly. So I can reset a new goal, set a new sell order, limit order, good till canceled. It's just how I like to trade. I'm goofy like that, but that I would give it a try yourself. Maybe try it on this one. Pick it up when it hits $6, and just put the sell order in on it, and just notice how many times your phone bongs every day. When you own 50 different stocks or 80 different stocks or 100 different stocks, you just keep buying them until it just bongs all day long. I'll get days with 6, 7, 8, 9, 10 bongs, and they're $30, $40, $50 each. And you're like, wow, this is cool on some days. On a really, really bad day, you might get 3 of them. You're kind of surprised that only 3 things would hit the range out of everything. But nothing goes broke. A lot of things go to shit. If they go to shit enough, you maybe pick up a little bit more for a whole lot less than you did the first time. But and you just let them go to shit further. And if they're going to zero, they're going to zero. You didn't spend that much on them. So long as your non-going out of business ratio is better than like 75%, if you can pick them good enough to do that, for the meantime, you should be doing great. But anyhow, thanks for watching the video. Here's a good example of a company that I like. Have a good afternoon, good evening, and good night. Like and subscribe. Thank you very much.